The stock market is down, showing little to no signs of recovery. People are panicking, pulling their money out of the stock market in hopes of dodging an even deeper downturn. But here's the thing, I'm not selling. I'm doing the exact opposite. I'm still investing even or exactly because the markets are in a slump. So in this video today, I'll tell you why I'm not selling, how not to panic thinking that the world is falling apart, and some tips on how you can even profit from this dire situation. And this might be one of the most important videos I've ever made because it could be the difference between losing a lot of money and taking advantage of what many call a once-in-a-lifetime opportunity to build real wealth in the stock market. That being said, this is not financial advice and I'm not a financial advisor or consultant. Everything in this video is just my opinion for entertainment purposes. Please always do your research and due diligence before investing into anything. So, should you sell your investments now before it's too late? Hold and ride it out, or even buy more during these turbulent times? It doesn't seem like there's an easy answer. High inflation rates in the past has driven prices up, causing people to spend less and company earnings to suffer. Interest rates are coming down slowly both in the US as well as Canada, but it will take a while until they get anywhere closer to pre-pandemic levels. And of course, lately global drama has been shaking things up. You can't turn on the news without hearing about geopolitical tensions, trade disputes, and especially tariff wars, keeping everyone on edge, and the stock market definitely doesn't like that, reacting with a whole lot of volatility. And there's debate about whether we are already in a bear market, generally defined as when a broad market index falls by 20% or more over at least a 2-month period. There is also uncertainty about whether we'll go into a recession soon or not. In any case, you don't need an economics degree to see what's happening. Stocks have taken a nosedive and it's given many investors serious chills. And sure, I won't pretend it's fun. Every morning I open up my investment app and see those prices dropping and just go, oof. But I've never hit full-on panic mode, and here's why. No matter how uncomfortable it might be to see those prices dropping, it's actually nothing out of the ordinary. In fact, it has happened multiple times in the past. Market declines of 20% or more have happened roughly every 6 years. And the most important thing is that a recovery followed every single time. Let's look at some of the biggest market crashes in history. There was the Great Depression, which began with the crash of 1929. Stocks lost 79%, and this was the worst drop of the past 150 years. And then there was the triple disaster of the Great Inflation of the 70s, where inflation averaged 7% and got as high as 12.3%, the Vietnam War, and the Watergate scandal, during which the stock market declined by 51.9%, and also the lost decade, during which the stock market lost 54%, which included both the dot-com bubble burst and the Great Recession. The markets recovered slightly, but not fully until 2013, more than 12 years after the first crash. So yes, the market has seen some wild swings, but over the long term, it's always recovered. And here's something important I've learned in general about life. When in doubt, always zoom out. That keeps things in perspective. So if we zoom out on this chart showing 150 years of stock market history, we can see a clear and powerful upward trend. $100 invested in 1870 would be worth $30,711 by February 2025. And well, even if we were born much later and invested $100 around 2013, after 12 years, your investment would have grown by a threefold to $307 in 2025. And very likely, similar will repeat in the years to come. Unfortunately, many investors think short-term, succumb to emotions of fear and panic, and do this big mistake. They buy high and sell low. Out of massive fear that they'll lose everything, they decide to pull their investments out of the market when stock prices come tumbling down. The logic is to save what they can before it's too late. But instead, what happens is that they not only realize huge losses, but also miss an opportunity to benefit from the upcoming market upturn. Selling your investments is the exact opposite of what you should do if you want to grow your wealth over time. And it's really easy to fall prey to this mistake if we don't understand about market psychology. Here's what investors go through, and I'd be lying if I said I'd never experienced similar kinds of emotions. When stock prices are up, there's euphoria and even overconfidence. But once the market drops, doubt starts creeping in. People feel anxiety and fear, perhaps even have sleepless nights, and then panic, ultimately leading to emotional reactions and pulling out their investments at the worst possible time. And this can lead to huge losses. So instead, this is what I think a smart investor is like. Someone who understands that the market can be volatile in the short term, but recover and trend upward in the long term. term. Someone who doesn't easily panic even though everyone around them is agitated. Someone who can make the best out of and even profit from a market downturn. By the way, if you've made it this far without panic selling your stocks, or at least without smashing your phone, then you might enjoy more videos like this. So consider subscribing and hitting the bell so you don't miss the next one. So in line with what we've seen going on with the market crashes and recoveries, I believe that this market cycle too will eventually recover, despite the unsettling tariff wars going on. Now, the million-dollar question might be, but when? When will the market recover? And the answer is that no one knows for sure. But if we look at history as a lesson, going back to this chart on stock market cycles, you'll get an idea of how long crashes and recoveries last. Anywhere from a few months to a year, up to a decade. Now, if we look at more recent stock market crashes since 2000, here for example, we see the S&P 500 dipping for just very briefly during the COVID crash, but very soon after recovering. So I don't have the answer either, and I don't know how strong and lasting the effects of the current tariffs and geopolitical tensions will last, but I am confident that the market will eventually recover. May that be in 1 year or even 3 years. I'm choosing to ignore the noise. I am not reading every single news piece on the tariff wars. Rather than panicking, I'm focusing on my long-term investment strategy, which is primarily about dollar cost averaging. This just means that I invest a set amount regularly, regardless of what the market is doing. And this strategy reduces the impact of short-term volatility and helps me stay invested for the long run. I'm mostly buying low-cost ETFs and also Bitcoin, which will give me solid growth over time. And I will share in a bit in more detail how I do this and some very important notes on what not to do, as it's not just about buying the dip. I have my investments on several investment platforms because I like to not just diversify my investments, but also the platforms I hold them on. But one investment app I love and have invested with for more than 4 years is Wealthsimple. If you're new to investing or just want to keep things simple and fee-free, then Wealthsimple is great for you. Use the self-directed investing option to save on investment fees. You can also easily open registered accounts like the TFSA and RSP on this platform. Wealthsimple lets you buy stocks and ETFs commission-free, which is great. Plus, the platform is really easy to use and it keeps things super simple for investors who just want to focus on the long-term and not short-term trading. If you use my referral code in the descriptions down below, you'll even get a $25 bonus just by funding your account with $1. Now, some people might think it's crazy to invest money into a market that's falling, but actually, if you really think about it, it's the best thing you can do to grow your wealth long-term. In fact, for some people, while it may probably not be the once-in-a-lifetime opportunity, I think, but at least the once of a few in a lifetime opportunities to become rich in the stock market. You might think that pulling out of the market and waiting until it's safe is the best approach. After all, it's really hard to watch your portfolio shrink, but here's the thing, not investing is actually much riskier. For one, inflation is a silent killer. While your money's sitting in cash or underperforming, inflation is eating away at the value of your money. What you can buy with $100 today might only be worth $90 in a year or two just because of inflation. And so you need to counter that by investing your money. If you pull out of the market now and try to time the rebound, you might miss the bounce, that moment when the market turns around and shoots back up again. And studies have shown that most investors who try to time the market end up worse than those who just stay invested. Now again, just think of the COVID crash. People who were not invested into the market missed that quick rebound that happened short after. So now that we know that staying invested is the better option, and again, not financial advice, but my strong opinion, how to go about investing during these times. Here's a simple checklist. 1. Dollar cost average. And don't just buy the dip. Dollar cost averaging means buying consistently over time. I invest every few days, even just $100 or $200, regardless of market fluctuations, because that way I'm less likely to miss out on any dips. So don't just try and buy the dip, because until realized, the dip is oftentimes just a perceived dip. If you hold off investing and wait for that dip, you might miss it. That's why it's much safer to dollar cost average, and that keeps your emotions out of investing. 2. Have a solid emergency fund, which in reverse means do not invest all of your money into the stock market. While I keep investing, at the same time, I'm also increasing my emergency fund. That can come in the form of a high interest savings account that pays 3 to 4%. And check out this great high interest savings account from EQ Bank in the descriptions below. Or you can put money into a GIC. Plan out how much in emergency funds and other savings you need. That could be college money, a wedding, or other important life events. We don't know how long this market crash will last, and determine when it will recover, and you want to avoid having to sell your stocks when they're still down, so preparation is key. 3. Transfer to investing platforms that offer self-directed investment options. You might already have a broker who manages your investments, and in that case, they're likely charging you a high 1 to 2% management fee. But especially at a time when stocks are down, you want to avoid those extra fees at all costs. So move to an investment platform like Wealthsimple. As I've mentioned before, Wealthsimple has no account fees, no management fees if you're using their self-directed investment account, and no trading fees. And you'll even get a $25 bonus if you use my referral code in the descriptions below. 4. If you're in Canada, make sure to take advantage of the tax advantage accounts like the TFSA or the RSP to avoid taxes on your gains once the stock market rebounds and you should decide to sell some of your holdings. Also, it's a great time to rebalance your portfolio, something you should be doing regularly anyways. This ensures your asset allocation stays in line with your long-term goals. For example, to ensure you continue getting some steady payments, you might want to consider buying some high dividend stocks or ETFs in addition to your growth ETFs. Lastly, as crypto is also in a temporary downfall, consider buying Bitcoin. I'm continuing to buy Bitcoin a bit here and there on a weekly basis because I wouldn't want to miss out on Bitcoin's upcoming growth for the world. In case you also want to start buying Bitcoin, there's also a link down below to the crypto exchange NDAX that I use. And you also get a $10 bonus if you sign up using my referral link. Now, if you're a beginner investor or not a beginner but want a refresher on investment mistakes to avoid to not lose your money, you can watch this video next.